Hello, everybody. Welcome to the webinar. We'll get started with the fundamental analysis session at this time. My name is Troy. I'm a senior account manager with the company. I'll be leading the session tonight. Before we get going, just give me a quick okay in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. We'll get going. Obviously, a lot happening fundamentally. We all know what the big driving story is. It's been for some time, the pandemic spreading around the world. I hope everyone is staying safe and healthy and hopefully making some money while maybe quarantining in your house or wherever you might be to stay away from this virus. So obviously, all investments have risk. Trading Forex, CFDs, spread betting, options certainly has some risk to it. But just as obvious, there's also nice potential for profit, which is why we're all here. What we go over is meant to be educational in nature, to add some tools to your tool belt, so to speak, to improve upon strategies maybe that you've already been building, or to start to build new strategies, which is sometimes better than building on an old one that isn't working. And what we go over is not meant to be financial advisement of any kind. Now, you can read our full risk disclosure statement on AvaTrade's main website if you wish. One thing to keep in mind, and I'll show you on our website for those of you maybe who are first time in the webinar, on our AvaGo mobile app, and I encourage everyone to get the AvaGo mobile app on your mobile devices. It's got some tools on it, some features that are upgrades to the standard MT4 or MT5 mobile app. And what you'll see on the AvaGo mobile app, which can trade right on your trading accounts, same as the MetaTrader mobile app, you'll see some features that calculate your exposure for you as you're setting up your trade and your trade size and the distance to your stop loss. It'll tell you how much you're risking, how much margin is required. If you put a take profit mark as you're setting up the order, it'll tell you how much you'd make potentially with that trade. And so it eliminates the guesswork or the manual calculating or the need for a separate calculator as you're setting up your trade, so you know exactly what you're risking, what your potential profit is, how much is needed for margin, etc. And then also on the AvaGo mobile app, there's a feature called Ava Protect, which helps protect you, or does protect you, I should say, against any losses during the covered time period that you select for the protection. And that's for a flat premium cost at the beginning of the trade. You know exactly how much you're spending for that coverage, and any profits are yours after that, and any losses are added back during that covered time period. If we have a chance, I'll show you on the website where you can find it. Real quick, fundamental news, basically there's two types. We've been dealing with one type more than the other for sure lately. It's been driving the markets. The first type we can talk about are regular economic events. That's a type of fundamental news that's scheduled. We know exactly what the announcements will be. Maybe there are jobs numbers coming out, or factory production numbers, GDP numbers, etc. We know what the topic is, exactly the time of day it will be, and what the expectation is in terms of what currency it will affect, etc. Those are maybe a little easier to plan for, those types of fundamental economic events. And then the other type of fundamental news is what we call extraordinary economic events, and that's what we've been dealing with of late with the coronavirus. And before that it was Brexit, and before that it was another thing. And so we also have the trade war oil price war between Russia and the OPEC nations right now, which is a type of extraordinary economic event. And while we've all kind of forgotten about the trade war between US and China with this virus that came out of China, kind of put an end to that whole thing for a while. But that was another thing where there were breaking news articles all the time that you just didn't know when it would be or what exactly it would be about. Okay, and we still have that type of fundamental news happening now, and I'll show you some of it here in a minute. We'll take a look at the latest headlines and fundamental breaking news that's coming out, moving the markets, and then we'll get on the charts and we'll look on my demo at some potential entry points for you all if you're interested in maybe placing some trades after you understand the news and what the charts are showing. So as we go along, please ask questions if you have any, give input. If you have something that you think I should mention, please add to the conversation. I welcome that. We can take a quick look here and see what's happening today. Markets are green, okay, positive. The futures were green and it went right into the day and continued to be green. Markets are rising. This is a response to a lot of the stimulus measures that the different nations are doing around the world. Specifically, the US passed over a $2 trillion stimulus package, and the markets seem to like that right now. Okay. What does this probably create an opportunity for in the bigger picture, since most of the economists are thinking there's probably going to be a potential global recession? What does this enthusiasm with stimulus packages maybe help create for people who believe there's more doom and gloom to come? Yeah, some of you are saying potential short opportunities. Technically speaking, there might be some nice entry points right now if you believe the market might fall further. You know, if we're looking at the Dow Jones or if we're looking at oil, you might say, wow, everything's dropped so much over the past month or so. How could it drop more? We'll take a look. We'll look at historically at how low things have gone. And even with oil as low as it is, it doesn't mean it can't drop more. It certainly could rise. You know, that just as quickly as, you know, OPEC and Russia said that they don't have a deal and they started increasing production with the OPEC nations to drive the price down purposely to hurt Russia, they could just as quick, and you could have an article break that says, hey, they've reached a deal to cut production, and then you could see oil spike right back up, right? So you have to be prepared for that type of fundamental news, the extraordinary fundamental news. And honestly, that's really what's moving everything. I don't think we even really need to look at jobs numbers, factory numbers, PPI numbers, not in this environment right now, because this stuff is really moving everything. This headline, the US weighs the grim math of death versus the economy. They're talking about the fact that Trump in the US wanted to open the economy up, have people going back to jobs and everything else by Easter, which is only a couple weeks away. But today he came out and said, okay, maybe by the end of next month. We're shooting for the end of next month, he says. So he's the eternal optimist, which is maybe what you want your leaders to be. Some that are more scientific minded are saying maybe he's being misleading, but you can look at that a couple different ways. But the fact is, he sided with the doctors, with the science today, and said, yeah, no, 2 weeks, we're not going to try and send people back to work. Hey, Gert, good to have you attending. So this headline kind of is not good for the markets, right? The markets kind of shrugged that off today. We have to look at, well, why did the markets shrug that off? We'll talk about that in a little bit. Another doom and gloom headline: deaths, intubations, which is when they're putting tubes in people for breathing machines, swamped New Orleans doctors in coronavirus surge. Okay, same thing's happening in New York. Okay, talk about a large, important city for economic activity. New York is getting locked down quite a bit. New Orleans is next. They're talking some cities in Florida now are having huge outbreaks. This stuff's not going to be over anytime soon. Okay, so these headlines are pointing out that as much optimism as we saw in that first screen that we looked at back here, all the green, the VIX index is down, the fear index is down. Some might believe that could be short-lived, that momentum. Maybe, maybe not, right? But for technical traders, we'll look at the chart and I'll show you there's maybe some opportunities there to risk just a little bit and go after what could be large profits. Understanding that, hey, I could be wrong, but boy, I could really hit one here. with a small risk. So this is what these fundamentals do for you. These huge swings that can happen. I mean, if the Dow Jones drops 1,000 points closing the day out today, hey, you didn't have to risk much. Once we look at the chart, we take a look at where the resistance levels are. Nasdaq, some other opportunities as well. So here's another one. Indian police fire tear gas as jobless workers defying the lockdown. There's panic spreading in some countries around the world. It's things are getting worse before they're getting better, it looks like, from all these headlines around the world. Macy's, big company in the US, they're furloughing, and no, that's not a misprint, 130,000 employees all at once, okay? You know, the US just had a job, unemployment numbers came out. There's like 3.5 million new people signed up for unemployment with this last report, which is, I think, a record ever. And now another 130,000 furloughed just from one company. Imagine there are thousands of companies that are still laying people off. And that's just the US. We're not talking about all through Europe and every place else. Okay, so here, UK epidemic is slowing. Now we'll get into some positive news. Okay, and this is why the markets are up and down, right? Some positive news. UK epidemic is slowing. Antibody test could be ready in days. What's the significance of that? If there's an antibody test, maybe you had a cold a couple weeks ago and you didn't realize what it was. You take the antibody test and they say, hey, you had the coronavirus and you got over it. You've got the antibodies in your blood. That means you can go back to work, right? You're over it. You can't spread it necessarily. At least that's how viruses typically work. You might assume this virus would work the same. There have been some anecdotal stories out there that maybe someone could catch it a second time. But in general, once you have a virus, you tend to be immune to it once you have the antibodies in your blood. So this is a somewhat positive development. And there's been some news about that in the US as well, about being close to an antibody test. And so they could start sending people maybe back to work with less risk. Okay, so that's a positive development, and that could boost the markets. A development like that, if all of a sudden there's an antibody test ready to go. I know in the US also, they now have developed and are using a 15-minute diagnostic test to test if you have coronavirus. So people who aren't showing symptoms yet, a 15-minute test could test now instead of waiting 2 or 3 days before you get results, 15 minutes, they're saying. And that's ready now in the US, and I'm sure they'll be making that available all around the world eventually. So some positive developments that could turn things faster than people might think. US government plans for 1 billion doses of vaccine. They've got Johnson & Johnson, one of the big companies in the US, hired to make 1 billion doses of vaccine. They're testing it right now. They're having some results, I guess, that are somewhat good. That process, they think, will take months, though. 6 months, even a year, to pass the FDA and everything else to be able to administer through the larger population. But these types of articles give some hope in the markets, it's for sure. This was a big one today. When they talk commercial paper rates, they're talking about loans to businesses. The interest rates fell. And it makes sense because the US lowered their interest rate to 0. So the Fed's program is working, they're saying. Businesses are starting to take loans interest free, right? So now they can keep their businesses open as they're shut down for a month or two. So the markets really responded to that as well today. All right. So we looked at negatives, we looked at positives. Now we understand why there are big swings, right? And so probably there will continue to be big swings. With that said, a perfect tool when there are big swings in the market is something on our AvaGo app called AvaProtect. So our mobile app called AvaTrade Go, you can download here, platforms, AvaTrade Go. Okay, you can download it from this page. Google Play Store, Apple App Store. And then under trading info, the AvaProtect is a feature that's on that app. And you see here, as you're setting up a trade, put your trade size and everything. You pick AvaProtect if you want it. You pick the time period, and it shows you how much it costs for the protection for that time period. No matter how much you might lose during that time period, it's added back when the coverage period ends, and then the trade keeps running. or you can manually close during that time period before the coverage period ends and have it added back and then reopen without coverage. So there are different ways to use that. I think when there's high volatility, it's the best time to use it, in my opinion. So if you think it could run, maybe you're trading on gold, you think it could go $100 an ounce up or down, you're not sure which way, you feel like, okay, maybe it'll go up, but let me cover myself. If it goes down, you have a flat cost for 1 day, 2 days, 6 hours, whatever you choose. Profits are yours minus the premium cost. And if it goes no matter how far the wrong way during that covered time period, it's all that loss is added back. Okay, so really nice feature. If you have any questions about it, you can watch. There's a video down here on it. And you also can talk to your account managers, obviously, about it. The video's somewhat informative as well. Okay, so let's go to the charts and take a look at what's happening. What do I have on here? Euro USD. Okay, this is interesting. US dollar, somewhat people have been rushing to of late because they view the US as maybe the more stable economy to put their money into the currency of the US rather than other places around the world. The yen also is a traditional safe haven. So we see the USD strengthened a ton with the talk of that stimulus package when it was first saying that, hey, they're definitely going to pass this thing. The US actually weakened after they passed it. Maybe people realized, hey, they're going to print $2 trillion in money. So, that much currency being printed tends to weaken a currency. So there it went. And now the fear again is telling people, maybe we go with the USD again. And it seems to be dropping again off this little area here. So, and I say little area, but let's take a look. First of all, let me get rid of some of these lines. Let's not cloud things up. So we already see the potential for the USD to strengthen against the euro, to pull the euro down to 106.5 or so. Okay, so that was just a week or so ago, 106.5. All right. European Union has some problems with Italy and some other areas that have gotten hit much, much worse than other areas around the world with this virus. So you might say you have fundamental reason to think the European Union might struggle, and that might cause the euro to weaken more. Okay, the US has record stimulus that they've put out. Seems to be momentum today out of the US. So some signs that maybe the USD could be stronger. And when we look at the dollar index, okay, which is a mix of currency pairings, we see the dollar index is up today, 0.76%. So the dollar is up against a basket of currency pairings, not just against the euro. Okay, so there's a general trend there that the USD is strengthening through the day today. So we see the euro dropping down against the USD. And the question is, what kind of resistance line is this up here? And if we go to, let's say, 1 hour candles, we start to say, okay, resistance, it went up, it's back down. Let's zoom in a bit more, 15 minutes. That's quite a downtrend then. Okay, quite a downtrend that's been occurring today. That would have been nice to trade today. If you already did, great. You'd have been going with the fundamental news. It was easy to see early in the day what the fundamental news was. And when you see a little alleyway like this, it's simple. Draw your parallel line. Each time it comes up to the top of the slope, trade down. Top of the slope, trade down. Top of the slope, trade down. Wick right here, top of the slope, trade down. Okay, it's been occurring all day today. And it was easy to see because when you go to the fundamental news, this snapshot, this was all day. Okay, the futures were green before the US market opened. Now the Dow and S&P 500, Nasdaq are all green after the market opened. So it was easy to see that, okay, if I'm going with the momentum of the fundamental news, then what I'm going to trade on is the downtrend, not the uptrend. So I would trade from the high points down, high point down, high point down, high point down, and it never broke this parallel mark. So you could have been profiting on that all day. Now, it has reached a bit of a support now. You see it consolidated. Support, support, support. So if you think that this trend has room to drop, which again, let's go to like 4-hour candles, you see the room it has to drop, right? Here's where we are now. Look how much further it could go down if it repeats where it was just a week ago. So the potential is there in the history, the recent history, I mean just a week ago, for the euro to drop a lot more against the USD. Doesn't mean it has to, but the potential's there. Fundamental news seems to be on the side of the US economy a bit. So technically speaking, let's go zoom back in. What kind of pending order could we put to wait for confirmation of a further downtrend? Because right now it's consolidating. If you traded down, you're kind of guessing whether the downtrend will continue or not. If you wait for this support level to break and then have a pending order sell because then it reestablished the downtrend, what kind of pending order would that be? Yeah, it's a sell stop. Good, Maris. Sell stop would activate from a lower point than now. So if you think, okay, fundamentally speaking, if you feel there's more reason for the euro to weaken compared to the USD, you say, okay, it's consolidated now, it's going sideways, but let me put a pending order maybe just below this support level, right about here. If it breaks the support, I'm in on a sell stop. Okay, where would you then maybe put your stop loss? Back above the broken support that activated this. So your stop loss might be back up here somewhere. So a small risk to get in on what could be, let's go to the 4-hour candles to see the potential, what could be a huge, huge way down. Okay, and we're just going by the recent history that potentially that could happen again, because not much has changed from the time that the euro dropped from here to here. It's the same fundamental situation. So don't look at the micro version and say, oh, I missed it. It dropped too much already. It can't drop more. You got to back away, look at the bigger picture and say, okay, there's potential for a lot more dropping. Then you decide where do you want to get in and what direction do you want to go based on that. And if the fundamental news is with the USD and against the euro, you might decide to put a pending order below this support. If it breaks the support, you've got a lot of room potentially to drop as we look at the 1-hour and 4-hour candles. Okay. Bishop, a sell limit would be selling from a higher point. Okay. Sell limit would be if you think the movement's going to come back up, maybe to the next resistance level. Let's say it comes back up here to this old support where it got broken. If it comes back up to this resistance level, a sell limit would be a sell from a higher point. So you could program a sell limit to sell from up here. And there's no reason, Bishop, why you can't set up both of them. If you believe, and I'm not saying you should believe, but if you believe that this fundamental news means the euro is more likely to drop against the USD rather than rise, you could say, okay, I'll put a sell stop down here in case it breaks the support, I'm in. You could also say, I'm going to put a sell limit up here. In case it pulls back up, I'll take the better entry point at the resistance level because maybe in my mind, I believe it won't break the resistance because I still maybe feel the fundamental news is against the euro. Okay. Daniel, good question. If you're going to enter a sell stop down here, you want your stop loss maybe to be back above the resistance. Okay, if it breaks this support, that becomes resistance. So somewhere back up here. How far up you put it depends on a couple things. Your trade size and how much you're willing to expose, right? The smaller the trade size, then the higher you could put your stop loss. I many times like to put my stop loss above 2 levels, 2 price levels. And what I mean is if my sell stop gets in here, then I don't put my stop loss just above the support that was broken. I put it above the next one also. Okay. That many times gets rid of, sometimes it'll go down, it'll hit your sell stop, it'll spike up and then drop further. And it hits your stop loss if it's too close. So by maybe taking a little smaller trade, The same exposure amount then with a smaller trade allows you to put your stop loss above 2 resistance levels. And now you're less likely to get caught on a false spike that comes back up temporarily and then it continues down in the direction you thought it would go. Ian, are you talking about the video for AvaProtect, or you mean the videos for the recorded webinars? The recorded webinars are found on our YouTube channel. They're all recorded, including this one, under the English webinar section. And then if you just go to YouTube, search AvaTrade channel, you'll find it. And the video on AvaProtect is here. You go back here, go to AvaTrade's main website, click on Trading Info, and there's AvaProtect. Okay, and Trading Platforms is where you get the app that has that feature on it, AvaTrade Go. Okay. All right, back to the platform. So there's one opportunity that seems to make some sense. And you know what's interesting that might confirm in your mind whether or not you think the euro could drop more? The euro didn't bounce off that support level, did it? It didn't bounce. If it had momentum to go back up, look, it hit here. Now it came down to this support. It came back down and it hit and dropped, hit and dropped, 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 dropped. There's no strong momentum right now for it to climb back up. That could change, obviously, so you want to limit your risk. But, you know, if you can catch a sell limit from up here or a buy stop down here, you've got a shot at what could be, over the next week, a return back to where it was a week ago, which is, if it goes down to 106.5, we're talking 400 pips. That's quite a drop if that happens. That's quite a profit, and you don't have to risk much, do you? To have your stop loss just above, if it comes down and hits a sell stop, to just have your stop loss above 1, maybe 2 resistance levels. What's that? 30 or 40 pips to your stop loss compared to 400 pips potential profit, right? You only need to be right 1 out of 10 in that type of setup, and you can break even. 2 out of 10 and you're profiting. So it's a nice opportunity that has high potential and small risk, relatively speaking. Let's look for some others that look that way. Dow Jones. Okay, what's happening on Dow Jones? We see, to open the market today, it gapped down. Okay, and it actually gapped all the way down to here, because this started as a green candle, so that means it started here and then rose. Okay, so markets gapped down. Australian dollar gapped down against the yen, which makes sense. If the markets are scared, the yen tends to strengthen. Australian tends to weaken if there's bad news out of China, because they sell most of their exports to China, or they used to, until and will again as China gets going, hopefully. And so we saw a lot of assets drop with the fear on the markets. Then we saw a recovery, and part of that was due to the U.S. Okay, and you could see the CAC 40, the DAX, the Nikkei, all of them went up. Okay, it wasn't just U.S. indices. And so we saw it refill the gap. And by the way, that's a technical strategy. Okay, once it started to refill the gap, you could buy until it filled the entire gap, which was here. And that would have been a nice little profit. If it breaks above the gap, the strategy is buy. It broke above the gap. Friday's close, it broke back above, and it worked like a charm. Okay, the question is if you'd have gotten out early enough. That one might have been tricky. As soon as you saw a downtrend going, it might have been time to get out. So I see maybe 2 out of 3 of these probably would have been profitable, these moves around the gap. And maybe this one could have been a loser if you were trying to be patient, because it came right back down. But let's look at the current opportunity now. Let me get rid of these lines. Because you're probably more interested in the current potential opportunities. This is quite a resistance level here. Okay. This was a spot where it plunged from that location. Not that far back. These are 15-minute candles. It was Friday. At this price Friday, it plunged and then gapped down further at the open today. So we look over here and we say, wow, that's not far from there. How much do I have to risk? 21,950 to 22,125. So I could risk 700 or so points to get above. If you take a minimal trade size, it's not that much, depending on your balance, right? Compared to if you think that the markets will pull back down, I mean, right? If you think the markets will pull back down, it's pretty close to this reversal point. And if we go to, let's say, 1 hour candles, you start to see the bigger picture, okay? If you think there's a reversal coming, just if it pulls back to where it was when it opened today, let's say it could pull back to where it opened today maybe, and you take a shot at it. Why? Because we saw all the articles about India and the US and New Orleans and New York and all these places around the world, Italy and France, still having major problems, okay? So there's the potential that this could pull back down. No guarantee, right? The markets have been crazy. So it's about risk reward right now. And so we do a bit of technical analysis. We say, well, that's a reversal point there. And look, it's starting to slow down. So you could risk this much from here to here to get above that resistance and say, I'll take a profit maybe at the first major support level, which would be where it opened today. Many times movements will return back to where they opened. Not always, but many times, especially in an environment like we have now. So the potential profit, if it returns to where it opened today, is about 1,200 points down. And how much would you need to risk? About 200 points, not 700. 200 gets you above that resistance. 200, 250. So if you could make 700 and you're risking 200 points wise, that's better than 3 to 1. That's 3.5 to 1 ratio. So again, you look at the euro move and you say, okay, I set up my pending orders on the euro like we talked about to go with what could be a repeat of what happened a week or two ago with the euro. The potential's there, so you could set that up and go after it. Then you look and you say the potential's here. I mean, we see how low. Look down here. The Dow not that long ago was at 18,000 or so. If you're scalping, you might be looking just around 20,780, something like that is where it opened today. Okay. If you're more of a long-term mover, you might think differently. But in this environment, you might be careful holding things too long because the news keeps changing. So small risk, technically speaking, to go after a much larger potential gain to the first support level, which is where it opened today. Okay, and that's going with half of the fundamental news, right? The half that says bad news, doom and gloom, recession worries, all of that. The other half of the news already had its time, right? The market came rushing up today with the stimulus excitement, low interest rates, business loans, zero interest, all of that. Okay, the market went up for that. Maybe the other half of the news is going to pull things down. No guarantee, but small risk, relatively speaking, compared to much larger potential profit. And we see what the markets have been doing. Up a ton, down a ton, up a ton, down a ton, up a ton, down a ton, right? Over and over. So pick your spots. Go after these large potential profits if you want to, because the potential is there. We see it each day, okay? And the reason I'm leaning on the Dow Jones is because it has no problem moving 1,000 points in one day lately, even 2,000 points. So if you can catch technically speaking, an entry point that's advantageous for you, small risk, you really do have huge potential with this asset and other indices as well. I don't mean to shy away from other assets also. We can look at the FTSE. Doesn't the FTSE look the same? Look at it. Isn't there reason for the FTSE to drop right now? Fundamental news, fundamentally speaking, wow, you don't have to risk much to get above this resistance and take a shot to the next support level. Could pay off well, okay? Any questions on that? Any questions? I'll take a brief pause to see if anyone types any questions. Okay, someone's asking, would you recommend a sell limit on Dow Jones resistance? First of all, because I can't give financial advisement, I can't recommend that you take a sell limit on Dow Jones resistance, but let's look at what you're talking about and we'll talk about, could it make sense? Okay, here's the resistance. We talked about it. Technically speaking, risk reward, does it make sense to me? It does. Okay, it makes sense. It's a nice setup. Resistance level, fundamental news, enough negative fundamental news that you might think it's got a chance to respect the resistance and push down. And if you're wrong, not a big risk, right? So that's something I can't recommend that you do it, but it's something that you at least can understand the opportunity. Okay. Mubarak, what are you saying doesn't look user friendly? You mean the AvaGo app? Well, anything that's new, sometimes it takes a little practice. So maybe open a demo account, play around with it, and talk with your account manager. It really is a nice app, and it's got some nice features, and it's pretty simple to use once you get used to it. Sometimes it's hard to switch if you're used to a different platform or mobile app. Okay, so we all see DAX 30, same thing. Resistance level, maybe ready to drop, right? So the potential is there certainly for some moves that might make sense to try and make. Any other questions? Okay, let's look at oil. This is interesting. We predicted this last week, right? We talked about the potential for oil to drop. We were looking at this resistance level here. We were looking at the support level here. During the webinar, we talked about this resistance and that if it came back up near it, it might make sense to sell. And we looked at the fact that when we looked at 1 month candles, that resistance level was that level was an old resistance from a long time ago, from years back, 2016. You see, it was support there. And so when it broke recently, that was an area that didn't break for years. Okay, so when we zoomed in on it, then we said this resistance level was significant. Let's go back to 1 hour candles. We said this resistance level was significant. Okay, and now we see at the open today, oil gapped down. Okay, our support level broke. So during the webinar, we talked about a sell stop below the support, and there it went. Okay, and we talked about the next support level being around 20. And then we talked about putting a sell stop below that support, and there it went. It broke the support at 20. So you might say, well, it's too late to get in on oil if you think it's still going to drop. If we go to the 1 month candles, and then I have to zoom back a bit, you see back here in 2001 is the last time oil was lower than it is now, and it was down around 15 a barrel in 2001. Okay, so there's certainly possibility that it could continue to drop. What could happen if let's say unexpected news with Russia and OPEC comes out that they come up with a deal to cut production? What do you think might happen to oil? We talked about it at the start, right? Potentially there could be a huge spike up. So let's find the resistance level. Isn't this is probably a significant level right here. Okay, resistance, resistance, resistance. With all the negative news around, about economies shutting down, being quarantined, oversupply of oil, you'd think in order to get back above this level, there'd have to be pretty good news, right? So you might put a pending order up here. What kind of pending order would buy if it goes up through the resistance, confirming an uptrend? We're preparing for the unknown, right? You're putting a pending order just in case unexpected news. Yeah, Ebert, it's buy stop, correct. So at a level that you think is significant, that it would take some serious momentum to get that high again, you might prepare a buy stop. It might not be this level. Maybe you think 20.85 isn't high enough. Maybe you don't think that level is significant. Maybe you say if it goes above Friday's close, this was today's open down here, gap down. If it goes above Friday's close, maybe you think that's more significant, that if it breaks above Friday's close, you have a buy stop ready to go. Okay, that's up to you as a trader. What level do you think is most significant to say, okay, that's upward momentum enough that there must have been really good news for oil, right? That's the idea of the buy stop. Buying from a higher point isn't because you want to buy at a higher price. You know, intuitively speaking, we want to buy at a low price. So why would you wait for it to go higher before you buy? Because you want confirmation of the uptrend. That's the idea of a buy stop. So wherever you think it's significant enough that you think there's got to be strong momentum now, whether that's here above the first resistance level or above the second one, I like to go through more than one price level to confirm things or to get out of things. So maybe up here, once it breaks above 21.94, so let's say 22, that's a significant move up since it's below 20 right now. That means it went back above that 6-year or however many year resistance level that it just broke below that support level. So now it becomes resistance. So it's going to have to be pretty big news probably to get above these resistance levels. So you could have a buy stop, laying in wait just for the unexpected fundamental news that might come, or it might not. And if it doesn't come, then the buy stop sits there and you don't lose anything by putting it there if it doesn't activate. So that's one idea with oil. Prepare for the unknown, because boy, could oil have a ride up if it has reason to go up. Fernando, I was just getting to the next step. Good point. You're asking, could you also put a sell stop? Since none of us are Nostradamus and we can't predict for sure what the next news will be, it makes sense. Why not prepare a sell stop below this little support level? Here's the support level. You see the wick right there at 19.92. Support, it tested it. It's testing it again. So maybe at 19.5, you could have a sell stop, something like that. I mean, you pick your number, right? But 19.5 would be below this little support level. That would mean a continuation of the downtrend has started if it gets to 19.5. So maybe you put a pending sell stop down below this support, because we looked. The next support level is not until near $17 or $15 a barrel. So it's got quite a ways to drop if it breaks this support. So 19.5, 19.25, whatever you see fit to be an entry point on a sell stop might make sense. And then you don't have to risk much to put your stop loss back above 20, 50 cents up, $1 up to make $2 or $3 or $4 on the ride down. Again, look at the ratio. When the markets are running with big moves, that type of ratio is nice. It's not the only way to trade, by the way. Sometimes you want your stop loss to be further away than your take profit, because then you're more likely to hit your take profit and less likely to hit the stop loss if it's further away. But when the markets are blowing through support levels or resistance levels and then running huge numbers of points because of the momentum with the volatility that exists right now, sometimes it makes sense to risk less and have a much larger potential profit. But again, it's not the only way to do things. It's the way we've been looking today. But you can certainly set things up a little different as well. Any other questions or points? Okay, I think this is a good place to stop. We've been going for about 45 minutes. So I see Nasdaq looks the same as Dow Jones. Those of you that are wondering, Nasdaq resistance level, right? Resistance at what, 70, just below 7,900. You don't have to risk much for a much larger potential profit. If it comes back down to where it opened today, look at that. Look at the distance to where it opened today to the risk you'd have to take above this resistance. Same thing. It doesn't mean you have to say, I know I'm going to be right. It's technically speaking, it makes sense to maybe go after a much larger potential profit to where it opened today and to risk a lot less above the resistance. And fundamentally, there's something there that makes you believe that, hey, markets could drop. I mean, there is a pandemic, right? So it's not like we're making it up that, hey, there's bearish pressure. There really is a lot of bearish pressure on the markets right now, even with these stimulus packages that caused this rise today. So certainly you're probably at least 50-50 chance to win, right? And hopefully better than that, right? And with this type of risk reward potential, you don't even have to be right 30% of the time to profit, okay? Crude oil has been moving a lot. We were just looking at it. There it is. It just broke the support, didn't it? It's almost to 19.5. So instead of doing a pending order, you could do a market sell. If you think that confirms a downtrend, then you do what makes sense to you, right? Daniel, I don't send out signals, but you can attend my webinars twice a week, okay? You see it broke the support. You'd be just about in on a sell stop. There's nothing wrong with doing a market move as well. You could do, if you believe this will drop more, again, there's no guarantee, but it just confirmed a downtrend. So technically speaking, pure technical trader would sell now anyways, not even looking at the news. Then you look at the fundamental news and you say, wow, oil has a lot of reason to keep dropping. There's an oversupply all over the world and all the economies seem to be shutting down right now. So if you took a sell right now, and you put your stop loss above this resistance or above 2 resistance levels, take a smaller trade if you want to stretch your stop loss further without risking more, and you go after it. Listen, if you can make even 1% profit a day, that's a nice profit. If you can even add 1% onto your account per day. Mondays at this time and Fridays earlier, okay? 1 p.m. Or no, I'm sorry, 2 p.m. GMT, okay? It's actually 2 p.m. UK time, 1 p.m. GMT on Fridays. The time change is mixing me up. Different areas change times at different times. Not everyone does it the same. 1 p.m. GMT. You'll see the emails coming out, okay? And they're all recorded as well. If you can't catch them live, they're on our YouTube channel. Okay, everybody. Good luck on oil indices. We didn't have time to look at gold, but it's been moving too. And anything else that you want to trade on. The Australians got some pressure on it as well. Okay, everybody. Thanks for joining. It was a pleasure. Thanks for the good input, everybody, as well. It makes it more useful for everyone attending when they can learn something from someone other than just me. Okay. All right. Bye, everybody. On the Dow Jones. I love